Hump day is here. But is this the top of the hump for silver's price? Today, silver made a dramatic surge that left traders scratching their heads. And if you're not paying attention, you could miss the moves that matter. Let's break down exactly what happened, why it's happening, and what it means for your silver stack. Silver is holding strong above $50 for the third day in a row, with intraday highs hitting $52.51 before pulling back slightly to $51.18. That's a huge swing, and it shows just how fast the market can move when risk sentiment shifts. Hanging above 50 is more than just a number. It's a psychological win. And if we keep this up, it could form a brand new support level for silver. Why the move? Investors are fleeing equities, spooked by fears of an AI bubble and disappointed US labor numbers. These concerns are sending traders running towards safe haven assets like silver. Even more surprising, the FedWatch tool shows a sharp drop in the odds of a December rate cut, from just above 50% yesterday to only 33.6% today. That's a dramatic sentiment shift, yet silver is holding firm. Technically, silver's price has cleared key resistance near $51.25. Right now, it's sitting at $51.26, a small margin, but enough to show that the bulls are taking control. The next targets? The November 13th low at $52.10, the November 14th high at $53.65, and possibly the long-term highs near $54.60 to $54.80. Support is solid around $50.70, with trendline support from late October near $49.60. Even with backwardation in play, silver has shown stability that suggests buyers aren't letting go. Maintaining above $50 is crucial, because every day the price holds here strengthens the case for a higher floor in the weeks ahead. Of course, consolidation is coming eventually. Supply chains, global markets, and normal market rhythms will force a pause. But the more silver proves resilient above $50, the stronger its positioning as a strategic metal in your portfolio. Whether you're holding long-term or buying dips, now is the time to pay attention. Stay with me. This week could be one of the most critical for silver in months. And if you know where to watch and what to track, you'll be in position when the next big move hits. Now, let's dig into today's action. Silver has rallied over the past 2 days, up roughly 2.5%, and that momentum shows no signs of slowing, at least not yet. Prices briefly breached resistance near $51.25 on November 17th and 18th, and today we're hovering just above that critical level at $51.26. This isn't just a number on the screen. It's a signal that buyers are stepping in and asserting control. The FedWatch tool provides another layer of intrigue. Just yesterday, the market gave a 50-50 shot of a December rate cut. Today, that's dropped sharply to only 33.6%. Despite this shift, silver hasn't collapsed. It's holding its ground. That resilience tells us the market is factoring in more than just short-term interest rate probabilities. Traders are betting on safe haven demand, geopolitical risk, and increasingly, the scarcity of physical silver versus paper claims. What does that mean technically? If silver manages to stay above $51.25, bulls could test the November 13th low at $52.10, then push toward the November 14th high of $53.65. Beyond that, long-term highs between $54.60 and $54.80 are not out of reach. But intraday support is equally important. Today, it's sitting around $50.70, with trendline support from late October near $49.60. Even with backwardation in effect, Silver is showing stability, a sign that strong hands are defending these levels. This resilience above $50 isn't just a short-term technical story, it's a psychological and strategic milestone. Every day, silver maintains this level strengthens its credibility as a safe haven and a critical portfolio asset. Investors who bought dips and held are now seeing validation. New buyers entering at these levels are adding fuel to the rally. But remember, volatility is part of the game. Prices can swing $2 or more in a single session, which is exactly what we saw today, with highs above $52.50 and lows near $50.32. These swings can be frightening if you're unprepared, but they also create opportunity for stacking more silver at favorable prices and for watching key levels that indicate the next move. Silver isn't just moving, it's signaling. And if you're paying attention, these signals can tell you whether a triple top is forming or if a new support level is solidifying. This is the kind of insight that helps you stay ahead of the market, not behind it. Now, let's look deeper into what's driving this action. Investor sentiment is shifting rapidly, and silver is reflecting that. Concerns over an AI bubble, disappointing US labor figures, and the ongoing global equity sell-off are pushing traders towards safe haven assets like silver. Even as the Fed Watch tool shows only a 33.6% chance of a December rate cut, silver remains resilient. That's unusual, and it's telling us something. Technically, silver is consolidating above the 50 level on the 4-hour relative strength index, which suggests that the bulls are gaining control. This isn't just a blip, it's a potential sign of a larger upward move. If prices continue holding above $51.25, the next resistance to watch is $52.10, followed by $53.65. And beyond that, long-term highs between $54.60 and $54.80 are on the radar. On the downside, support is clear. $50.70 intraday, $49.60 from late October lows, and $49.35 from Tuesday's dip. These levels are being defended, and the fact that silver hasn't collapsed despite market volatility tells us that there's strong buying pressure keeping it afloat. That's critical for anyone stacking silver right now. It's not just about buying, it's about understanding where the market will hold or break. Another fascinating angle is the gold to silver ratio. Today it dropped below 80-1 for the first time in a while, showing silver gaining relative to gold. That's a bullish sign. Historically, when silver strengthens against gold, it signals increasing industrial and safe haven demand combined. And right now, silver is doing both. Geopolitical and macroeconomic factors also remain unpredictable. From potential peace talks between Russia and Ukraine to unrest in Mexico, global dynamics can push silver prices sharply in either direction. But despite all this uncertainty, silver is holding key levels above $50. That's why stacking now matters. These aren't just fluctuations. This is a market defining its next major move. Finally, let's not forget the human factor, sentiment and psychology. Market participants are watching, learning, and reacting in real time. The longer silver stays above $50, the more confidence new buyers have, the stronger the floor becomes, and the more momentum builds toward that possible triple top above $54. Now let's talk about consolidation and the bigger picture. Silver's rapid rise above $50 is impressive, but no rally goes straight up forever. Eventually, the market will take a pause. Supply chains, industrial demand, geopolitical events, and investor behavior will all play a role in defining a new equilibrium. Based on historical patterns, the most realistic support zone for silver looks to be around $40 to $45 per ounce. That's not a guess. It's drawn from previous pullbacks and long-term consolidation trends. Even if silver reaches $54 or beyond, a correction back to this range wouldn't be surprising. In fact, it would be healthy for the market, resetting the stage for the next upward push. However, the fact that silver is holding above $50 now is key. Every day it stays above that mark strengthens the argument that $50 could become a new psychological and technical support level. This is important for anyone stacking silver. It's not just about riding short-term spikes, it's about positioning yourself within a resilient market structure. Volatility remains a constant. A $2 to $3 swing in a single day is normal for silver in this environment. Keep in mind that unexpected events, economic reports, Fed decisions, or geopolitical developments can trigger sudden moves. That's why monitoring not just price, but sentiment and external factors is critical. Finally, let's not forget the long-term strategic view. Silver is now officially recognized as a critical mineral by the USGS. That designation alone ensures that industrial and strategic demand will continue to support its price floor. While short-term traders react to daily fluctuations, stacking silver with a long-term mindset allows you to weather pullbacks and capitalize on upward trends. In short, silver is resilient, but it's not invincible. Understanding where it may consolidate, where support levels lie, and how external events can affect prices is the difference between being reactive and being prepared. So, what does this all mean for silver investors right now? First, it's about positioning yourself correctly. Holding above $50 is a significant milestone, but don't get complacent. The market is still volatile, and corrections are part of the game. Keep an eye on support around $50 and potential dips toward $45 or $40. It's all part of the natural ebb and flow of silver. Second, understand that external factors, geopolitics, Fed decisions, industrial demand, will continue to influence silver's trajectory. Being informed is your edge. Track economic indicators, monitor market sentiment, and pay attention to news that could trigger sudden moves. Third, think long-term. Short-term swings can be dramatic, but silver's status as a strategic and industrial asset means its value isn't going away. Stack wisely, diversify your portfolio, and always consider the bigger picture beyond daily price action. Finally, engage with the community, share insights, learn from others, and stay disciplined. Markets can be emotional, but informed decisions win in the long run. Thank you for tuning in today. If you found this analysis useful, insightful, or educational, please hit that like button, subscribe to the channel, and ring the notification bell so you never miss an update. Your support helps us bring you the most accurate and timely silver market insights. Remember, diamond hands, diamond fists. Hold tight and stay informed. I'll keep tracking the markets for you, and we'll navigate these movements together. See you in the next video.